Good morning, everybody. Welcome to your Monday edition of the TraderMerlin Show. A little bit of a meltdown out there for everybody, and I've got so much to talk about. I have a feeling we're going to go pretty much a full hour show today. So hello, welcome, everybody. Hey, Chris, good to see you from Fairfax. We got Fairfax represented. I got Wisconsin represented. Who else do I got in here? We always get the states. You guys like to tell me where you're from. David in Ottawa beat Les today. He's out in Cape Canaveral. So welcome, everybody. Good to have you all with us today. Yes, I did tweet out Jim Cramer. A couple different things before I get into the market meltdown. First off, you guys know Jim Cramer tweeted out this thing about Netflix, right? NFLX. And I have marked here when he made that call, which was back on January 3rd. And look, I have no problem with anybody making a call. Anybody can make a prediction about where the markets are going to go. But when you're somebody like Jim Cramer and you have thousands and thousands, if not millions of people following you, you owe them a service to say, if I'm wrong, here's where you get out. And I think that that's something we've done on this show as well. Look, I'll make calls and I'll say, hey, here's where I'm getting out, right? So if anybody ever comes to me and is like, oh, I lost a lot of money because your picks, well, you only lost that certain amount that was defined by the risk. So I got to call out, I don't know who this guy is. I'm going to call him Ass Clown because this guy is a friend of Giovanni, who is an OTA hater. So thanks, Giovanni, for that one. But I just wanted to share this one with you guys so you can enjoy it with me. This one lot Larry, Dan, over here, trades futures. He goes, bro, you work at OTA. You guys were wrong on like 80% of your students' trading accounts. Hey, Ass Clown, if you understood the facts of what OTA does, we're a school. We don't trade people's accounts. And every time we do a pick, which is something like Pro Picks, which is really just calling out levels and zones, everything in there has a stop loss on it anyway. So we're actually doing a service and educating on here's levels, here's zones, here's entry, stop loss, and price target. Your fly-by-night, shoot from the hip number of 80% that you pulled out of your ass, show me any statistical proof or evidence of that number, and I will gladly sit back and take it. But until then, shut up with your stupid opinions about OTA. You know nothing but what you read in a lawsuit, which was bullshit anyway. Am I in a good mood today? I think I am in a good mood today. All right, let's go and talk about this market meltdown. So here is the big stuff for today. I think it's pretty damn important that we just dive right in with this. So obviously we have the equity markets breaking down below some pretty key levels, which we've been talking about for quite some time on our show. So let's start off. I'm going to actually go from the bottom and work our way up to, go from the top and work our way down to just the apocalypse that happened in crypto today. We'll just leave it at that. So let's start here with chart of gold. Gold is your best performer on the day, only down 1.54%. So not looking great. Again, we mentioned that there's obviously some inherent weakness. We've seen on this daily chart here on gold that has been making these lower highs, lower lows. Hey, that trend is your friend till the bend at the end. So it's going to keep on drifting here until something changes course. And I think a lot of money is trying to lock in profits and cash out a long position. So it would not surprise me to see this drift down even further. We did kind of close this gap right here, just right there. But, if you're in long gold, 1790 looks like a pretty logical next stop for it, which is about $60 away at current price. Yes. Now I'm going to move down the list. So that was your best performer. Here we have Dow Jones, which has been one of the strongest of the indexes. Notice it's taken the longest to roll over, and it's finally just today broke down below that kind of demand zone right around 32,375. So there you go. S&P 500. This is the one that I'm interested in. We actually have these levels mapped out, looking at this being a target here, and lo and behold, I forgot which one of you guys said this the other day, was pointing out that 3980. Was it you, Pepe? I forget. One of you guys pointed out that level, and I said, yeah, that's your next logical target. Did not think we would hit it in one day. I thought we might drift down a little bit further. I was actually expecting there to be a little bit of a bounce this morning, given what we saw at the tail end of last week, but we didn't get that. We just got nothing but sell-off all day. S&P down 3.15%, and I think it's pretty clear at this point. I would say we are going to see more downside movement over the next few months based off just market uncertainty, the Fed raising rates, etc. So here was, as we start to get really ugly stuff, here's your NQ. Now, the NASDAQ fell aggressively today. To me, it was right down to this blue line we had drawn on here from last week. Right, you got 12,250. I said that's your next logical target. Again, I did not think we would hit that in one day. We're still below it right now. I would say maybe even beyond that demand zone. But after that, where are you looking at? You're going all the way down to 11.9, which would be about another 1,000 points lower on the NQ. I don't think that'll happen in one go. It'll probably slowly drift down there, but we are seeing more downside move. Now, I just as a note here, I had some puts that I had purchased a few weeks back. I closed those out today. I have, I think I have 10 or 15 of the Russells left, and those were for June, which I just kind of held on to. So I'll probably get rid of those by next Friday, so I don't have less than 30 days to expiration. But pretty much most of my shorts have been closed out. I'll talk about entering this short move here, or where we might want to be looking to go short in a little bit, because it's a good question from KF. So let me continue on here so we can get to the real bloodbath. Oh man, NJ, wasn't just everything got slaughtered today, right? Here's your Russell 2000. Now, we had already breached that lower level there, which is 1881 on the latter part of last week, and today just almost in a free fall, just tanking almost the entire trading session and closed right near the lows. You know, as I look down here, you kind of got to map out, like, where's that next big spot? I really don't see anything that appeals to me. None of these levels, even these ones that you get down to around 1560, don't look great as far as demand zones, but that's where I'm going to have to make my target going forward here on the Russell. So again, ugly news out there as well. Now, crude oil. Holy shnikes. Talk about a big dip down today. Here's your daily on crude oil. I'll take this part out here. We don't need that anymore. But giving back really all of last week's gains, it was looking good, right? We had that slight little cup and handle that was breaking up. We had higher lows, so it was looking good for crude oil. But, of course, in the panic sell today, a bunch. You know, panic sell today could really cause a huge pullback of 6.76%, but that isn't even the big story, and I'll tell you why. So here's the crypto story. Now, we've in the CIL program, we've been targeting $30,000 as a pullback for some time on Bitcoin. Let me get some of this artwork off the screen because it's just annoying at this point. We'll get rid of all those lines and focus on what is important right now. Now, you notice that we had a gap down on the Bitcoin futures over the weekend. That's because on Saturday, you had a whole bunch of bad news coming out with specific cryptocurrencies. So that really started a selling effort today, and I'll explain why Bitcoin tanks so much and why I bought some today. I bought about 15K worth of new crypto purchases today because this is a forced liquidation. This is literally the markets being forced to do something, and generally when you have that happen, it will usually kick back the other way. So you can see right now we came into this area demand zone right around 30,000. The low on the day for the Bitcoin futures was 30,300. I ended up purchasing right around 30,800, so I feel pretty happy where I bought mine, but doesn't mean that this is over. It just means that I expect there to be a significant bounce from here, maybe even close back up to this 36,000 mark where this gap started. Now, you're probably asking, well, what the hell happened? Why is it such a big deal? Well, I'll do a gratuitous plug. I normally don't get to do gratuitous plugs, or I don't like to do gratuitous plugs just because it annoys me. But I'm going to share this with you because I will be up in Las Vegas this week. I'm leaving tomorrow, so I will be doing a presentation in Las Vegas called 3 Easy Ways to Supercharge Your Portfolio with Digital Assets. If anybody is interested, you can get a discount on tickets. I believe the expo actually started up today, so not a lot of time in there, but let me post these two things in our chat, so if anybody is not going and would like to go, there you go. There's a link, and then if you use OTA 50, I think that this will work. Let me see just real quick. I want to make sure that this works. Okay, so the link worked, and then if you use OTA 50, I think you get a discount on tickets as well. So there are your username and your your username, or the link and the discount code. So I will be doing a presentation there on Wednesday at 11 a.m. is a meet and greet, and then from 1:30 to 2:15, I will be giving a presentation on cryptocurrency. Again, this is the topic. Now, I thought it was interesting because this topic, part of it incorporates stablecoins, and we've had this discussion with you guys before about what stablecoins are and how important they are. The challenge is one of those stablecoins, UST, which is Terra Luna's stablecoin. Luna is one of the cryptocurrencies. Basically, they have this algorithmic stablecoin. The way an algorithmic stablecoin works is it is computerized, and if there's a whole bunch of buying and people trying to buy the stablecoin, well, that would normally drive price up. So what the stablecoin will do is issue a whole bunch of new UST in order to keep that price pegged at 1. Or if there's huge redemptions and everyone's selling their Terra, like today, they remove from supply a bunch of Terra or a bunch of UST, and thus keeping it pegged at 1. They also have a bunch of Bitcoin to help peg this, and it's kind of like an emergency fund to back up this this stablecoin. Stablecoins are supposed to be pegged to something like $1. So let me go and show you what happened here on UST. There it is. So here's your stablecoin today. This is, again, remember, a stablecoin. And if you own the stablecoin and you deposit it at different sites, you can get about 18% interest per year. 18% interest per year is epic, right? Well, you see clearly not pegged. It went all the way down to 91 cents, which is roughly a 10% lower than the $1 peg. Now, that may not seem like that big of a deal, but it is. It's huge because what happened is Terra Labs, which is the company that runs Terra Luna, they basically had to start selling Bitcoin. They moved over $41 million worth of, it was 41,000 Bitcoin over to Gemini today, and they were forced to liquidate that in order to backstop this stablecoin. So that's why you saw this tremendous sell-off really aggressively happen. Here's your intraday chart of Bitcoin. Right, you can see just real aggressive selling all day, and then after some of that Bitcoin had sold off, there was incredibly high volume. Then all of a sudden, things spiked up. So it was basically this situation, in kind of layman's terms for people who might not be familiar with crypto. What you essentially had was a run on the bank. Right, think of that stablecoin as the bank. People are parking their money; they're earning interest on that money. For whatever reason, my guess is it was a designed, orchestrated attack to see if they could flaw the system. You had huge people redeeming their stablecoins, selling it and getting out of those stablecoins. So all of a sudden you had this massive sell-off, and it moved so much it broke the peg. Then all of a sudden Luna Labs had to go and sell Bitcoin in order to cover the losses and hold that peg. Now in the long run, I guess the question is, what the heck is the big deal here? Like, why is this such a systemic failure discussion? Because if the peg fails, you've got billions of dollars sitting in UST that is at threat of losing significant value. And of course, the reason you buy a stable coin is you are expecting it to stay stable. Patrick says, what stable coin was that? That's UST, right? That's Terra Labs' UST stablecoin, or Terra USD is what they call it. So you kind of have to put yourself in one of two camps. Do you think that this thing is going to completely fail as a project, as an algorithmic stablecoin, and free float, and then all of a sudden all hell breaks loose and who knows what happens to the stablecoin? Or do you think that the amount of capital that Terra has is enough to sustain it and back this up? And I think it's actually that one. I think that the Terra has a lot of capital that will bring this back up to a peg of $1 in time. Right? It might take a week or so for them to bring it back up, but you also have Galaxy Digital and dozens of other major firms are invested in this, so I don't see them letting it fail. Now, if you look at Luna, which I also bought today, I bought 5K worth of Luna. Right, Luna had this is the one who makes the stablecoin, and there's a complex mechanism where you can actually convert your Luna into UST. It's kind of the minting process for it, but we won't get into that here. You can see it was down over 25% today. Back here, it was down around 29 or 30%. Ended up buying some at 46, and I bought some at 48, so got a little bit of Luna in my portfolio as well. I bought 10 grand worth of this one today. I don't know about Ecuador, but I did see that as far as Bitcoin goes, El Salvador bought some Bitcoin today. And a lot of people were buying thinking that this is because it's a forced sell, right? When you have a forced liquidation. And remember, one of the dangers of the whole crypto space is there's so much leverage being used. In the US, you don't really get much leverage, but if you're using international exchanges, you've got 10, 50, 100 to 1 leverage on these, and a lot of people are leveraged to the hilt. So as soon as you have these drawdowns, you get forced liquidations. And when you have those forced liquidations, obviously you get these big down moves. Now, the Bitcoin one was substantial because there was so much Bitcoin needed to be sold in order to cover and balance that out. Hey, thanks, NJ. The boost fund for Vegas. Short of Luna today, nice little price. Good stuff. I mean, that's a risky one. You got to have some cojones of steel to be playing that thing. That's juggling chainsaws, but not a bad trade. I mean, it was a huge down move. I do think that Luna will be okay in the long run, but again, you're looking at, does it take weeks or months to recover? It was a pretty nice bounce there in Luna near the end. I didn't see what we were at right now. Let me check it out real quick, because so at 48. So I'm up on both of those. There were two $5,000 lots that were purchased on that one, so doing okay. But it highlights a bigger issue. Now, you guys know I've been talking so much about stablecoins and why I'm a big fan of stablecoins. I think if you look at the spectrum of a stablecoin, you have cash backed, you have fiat currency backed, you have commodity-backed stablecoins, you have algorithmic stablecoins, and you have synthetic stablecoins, and all of them have their pros and cons. But I think what will happen with all of this is a really important part for U.S. regulators at this moment in time. What will happen is I think that the U.S. regulators are going to look at this and go, okay, we'll allow stablecoins in the United States, but we're not going to allow a algorithmic one because do you see what happened with Luna and UST? We can't have that. What we want is a stablecoin that is physically backed by dollars. So what's going to do well? You're going to have USDC will probably be the main stablecoin in the US, in my opinion. You'll have Tether kind of move to the second level because they're in too many derivatives. They're in bond markets and commercial paper. A little too risky. But USDC is in government bonds and fiat currency, and it's backed and audited totally. So if there's a run on it, fine, we have the cash. A lot of these other stablecoins are putting that money in something else, and that inherently adds more risk to the scenario. When you have an algorithmic one like DAI, when you have DAI or UST, it's a computer program. In this case, you got glitches in it. You got bugs that somebody could break by flooding the market with that specific stablecoin. So that's what happened out there today. We'll see over the next couple of days how this washes out, if there's more fallout from it. But I think personally, today represented a great buying opportunity for anybody looking to get into crypto. I mean, look here, just look at our watch list that we follow here on the show. I'm going to go from the worst performers. Almost everything, double-digit losses, excuse me. Let's see, the single-digit losses, there were a few of them in here, but most were double digits, and you had one gainer. You had Monero XMR as your gainer out there today. Bless you, Monero. Thank you. I have you in my portfolio, and I'm trying to get rid of you. You just haven't hit my exit price, which is $3.14 and change. So, exciting stuff out there. I know some of you who are holding long crypto are probably feeling the hurt right now. I think you're all right. You know, we did a session in this Crypto Investor Live program where we actually focused on this 4-year cycle. And there's a very clear 4-year cycle, at least for the last 12 years, of price behavior. And at the beginning of that 4 years, like the first 9 months to a year, you have a fairly aggressive sell-off in cryptocurrencies. And we're in that part right now. So I still think you have more downside overall, but I think today did represent a good buying opportunity if you're a long-term hodler. Generally what you have is after that first year, it flattens out for a couple of years, and then that last 18 months is just an absolute moon rocket parabolic move, which of course we would all love to see happen in our crypto portfolios. All right. Let me see. What do you think of XRP at 36 cents? I don't know when I'm coming to Jersey. It's been usually when I'm going to Jersey, I'm flying through the airport there. I've only been through and stayed once. I was actually traveling through to go to Bethel. We'll go up to Woodstock to see some concerts. But what do I think of XRP? I'm really not a huge fan of Ripple. I'm not. I think that because they've been locked up in this legal battle with the SEC, I feel like you have other cryptos that have taken over their market share. So notice the price chart. I mean, this is just the mother of descending triangles here. If you're looking at Ripple, I still think they've got a lot of challenges ahead. I actually used to have Stellar Lumens, which is kind of doing something similar as just a payment network, remittances, etc., and they're underperforming as well. So I just really don't see Ripple, rocking back up to those highs. I have a lot of Ripple still, but I just personally, it's one of those ones I've kind of written off, and I'll hold my position, but I will not be adding any more to it. And if the price does rocket, I'll probably unload my Ripple position and just be done with that one once and for all. You know, they'll probably get a pop as soon as there is a settlement with the SEC, but that who knows when that's going to happen, as I have kind of witnessed firsthand how wickedly regulators will drag on a lawsuit. Like regulators, whether it's the SEC, the FTC, the FCC, whatever, if they're going to sue you, they're going to drag it on as long as possible because they have infinite pockets and they know that the companies fighting them don't. So they will literally just stall and stall and stall. So ultimately, you're just like, I give up. I can't. Some of these court cases should have literally been like a 1-month trial, done, over with. Instead, it's like 3, 4, 5, 10 years dragged out, and the person that's being sued just can't afford that, and they usually go belly up. It's a travesty, in my opinion, to the legal system that our government agencies have that kind of power to just drag things off. There should be an arbitrator in there that says, hey, you're stalling. Get your act together and finish this thing now and quit trying to do this stuff. So I'm not a Ripple fan. I do own some, but I'm not a fan. Let's see. J-Best, thank you very much for the contribution as well. My whiskey fund's getting better. Any idea when these CeFi platforms will be allowed to pay interest again? Not in the U.S. Not in the U.S. I don't see that changing in the U.S. anytime soon. I believe what we first have to have is we need to get some regulations on stablecoins. Once we have the regulations on stablecoins, hopefully the Treasury as well as the Fed can come together and say, here's how we're going to define these market segments. But again, it's government-based, so it could be a long time. I was really hoping to get clarity by the end of this year. Jay, really for me, what I'm doing is I'm looking international. I hate to say it. There's a few domestic places that you can actually get some yield domestically, but you have Nexo is now done. You have Celsius is over. BlockFi is done. So you're left with Crypto.com, which has been slashing their rates ridiculously. I have a feeling they're going to be done soon. And then you have Voyager is kind of your main one in the U.S. But there's some other ones internationally that I think offer some great yield. I'm still doing my research, and I'm a little scared, to be honest, just because some of them are in Singapore, some are in different parts of the world, and I just don't trust them. But boy, those yields they offer are very, very, very attractive. Hey, Gary, thank you very much as well. Appreciate that. This is a great Monday. I'm loving it. Let me see here real quick. Do you think MicroStrategy's stop loss on Bitcoin at 28,000 could be targeted by hedge funds? I absolutely do, Fluey. I really do. This is the problem of telling someone kind of where you're at. So if you look at MSTR, right, MicroStrategy getting smoked today, down 25% for MicroStrategy, and I think that that's part of it. Remember, there's two factors here. Number one, what caused this sell-off today in crypto? It was UST. It wasn't that Bitcoin was weak. It was UST stablecoin unpegging, and then and Luna needing to sell Bitcoin to make things right. Okay, so that's why you had this huge sell-off here in Bitcoin. Now, what do you think is going to happen to MicroStrategy, who has, I think, if I'm not, let me see how many Bitcoin MicroStrategy has. I don't know off the top of my head. I thought it was like 100,000, but I think I'm totally wrong. Oh, that 125,000 approximately. So, today you saw a panic move because there was, 41,000 Bitcoin. And I don't know if all of that got sold. It was just moved to an exchange. Remember, a lot of what MicroStrategy has done is they have bonds and loans that are backed by Bitcoin. And on that one loan that they recently got, I think it was for either $200 or $400 million, they're using collateralized loan with Bitcoin, which means that if Bitcoin drops below a certain price, I believe it is 28,000, it's a forced liquidation. There's nothing that MicroStrategy can do about it. And if that happens, you could see MicroStrategy really tank. I think that today's move was a reflection of that, right? You look at Bitcoin. So here's BTC. Bitcoin was only down 8% today, but MicroStrategy down 25. I think people are thinking that this is going to happen, that they're going to keep pushing. You have people out there saying, take Bitcoin down, sell it, sell it, sell it, sell it. I will tell you this. For me personally, if that happens, if we get that trigger point and MicroStrategy ends up forced liquidation of all this Bitcoin, and I don't know if they'd have to sell it all, but they would have to definitely sell some to cover margin calls. If that happens, you're going to have a massive sell-off in crypto. Bitcoin will drop another 15, 20%. All the altcoins are going to drop 20, 30%. And then you're going to have a phenomenal buying opportunity at that moment in time. When you have a forced liquidation, again, it creates great buying opportunities because it's panic sell. They didn't want to. They were forced to sell because of contractual obligations. And we could see these things drop much further. And again, I think that MicroStrategy is actually... I think that people are expecting that to happen, which is why you saw people getting out of MicroStrategy. At some point, maybe going long MicroStrategy would be a great opportunity. I just don't think it's right now. Why buy crypto now and not wait until the ES finally shows the bend at the end? It's a great question, Joe. And again, this is where it's all about each individual person, right? Each person needs to make their own decisions on what to do here. I'm thinking 5-10 years down the road, so I'm okay to buy some, right? And I have liquid capital. Some people don't have any capital. That's fine. Don't put it on the line unless you're be prepared for some more downside movement. I think the writing is on the wall for more downside movement in crypto. It just seems that that's the S&P looks like it's going to keep on tanking. That means more money being pulled out of the markets overall. Maybe people pulling money out of crypto to cover margin calls, etc. So to me, I think that you're probably going to see it overall drift down lower. But if this happens with MicroStrategy and they're forced liquidated on over 100,000 Bitcoin, well, I'll tell you, it's going to be a great... it's going to be one of those ones that you're just going to sit there and watch the market and your jaw is going to drop. It's going to be moving that quick if they're forced liquidation. Merlin, El Salvador said it was buying the dip, but it's still called buying the dip when there's a downtrend. Yeah. Well, everybody buys a dip. Every time you buy something, you think it's a dip, right? I mean, you're like, oh, this is it. It's going to go up from here. So nobody buys thinking it's going to keep going down. But you bought it with, buying the dip. Everybody thinks they're buying the dip. Just the way it works. Let's see. Michael Saylor position Bitcoin going to it may get liquidated, KF. It could. Coinbase is doing huge today. Oh, it was down huge? I actually didn't see Coinbase. And this is one I've been wanting to add to my positions. Ooh, lordy. And I get, maybe I'm not totally versed on Coinbase's exposure. I know that they do have a lot of crypto holdings, but down almost 20% today. It begs the question of, with this risk to UST and the stablecoin ecosystem, what does that do for the broader picture, right? Does it damage the entire crypto space? I don't know. I don't know how this is all going to shake out, but it certainly is, your seismic event for the crypto world, and maybe that's just why Coinbase took such a big hit today, but that's a pretty big drop out there. And again, I am long-term looking to buy some Coinbase, and maybe I'll have to buy some call options that are out of the money. You want to buy the dip on Mara? There's Mara. You're right at an area of demand, so I wouldn't say this is the worst place to be buying, but again, things are trending down. We have a very, very aggressive trend to the south side here in pretty much everything, right? I know we focus on crypto here a lot today, but you look at crude oil, it's now just going sideways. You look at the S&P, it's broken demand zones, and to me, it's going to be seeking a new floor. Gold also showing weakness and trending lower. Here, the NASDAQ is, this is really ugly for NASDAQ. The Russell, same thing. This is the canary in the coal mine people always talk about. If you go off the all-time highs that we achieved back here on November 8th to where we bottomed out today, we're down roughly 28%. 28% for the Russell. Now, let's just look at the S&P here real quick to get an idea of how much it's off, because it's not off that much. This is ballpark. I'm not going precision numbers here. Down about 17.5. And again, I was expecting this market at some point, the S&P to be down over 20% and bounce back up and be down only 15 by the end of the year. It may far exceed that if this pain point keeps on moving. Tom says, can you approximate the price of MicroStrategy when Bitcoin USD hits 28,000? Is it a multi? I don't know. I don't know the calculations there, Tom. But I do know what will happen is you're going to have an overdone sell-off on both Bitcoin and MicroStrategy, right? Because most people that have Bitcoin are hodlers. They want to hold that position. And if all of a sudden this massive liquidation is going to come out and force sell, whichever exchange those Bitcoins are being liquidated on better be able to handle that much volume. Because if it's a low liquid exchange, which obviously it wouldn't happen, but if it was low liquid exchange and you dump all that Bitcoin, do you see a 10,000 print on Bitcoin? That's the forecast I had. When I looked out at the 4-year cycle for Bitcoin, 10,000 was the target based off historical sell-offs in that first year. And I was like, oh, crap, Bitcoin at 10 grand? Man, that would be way further than I had expected, but that's just what the charts showed. But, we have a lot of other levels here which are pretty important. Here's your Bitcoin futures. You can see 23.6 is a pretty significant one. I also see that 18.3 is going to be a pretty good one. But, yeah, lots of I think there's definitely more downside in the cards. But if you're a long-term holder like me, I'm okay buying right now. Let me go to some questions here because I had all kinds of stuff, and I hope I have a chance to get through it all. This is for KF, which is a good one. And KF, thank you for your questions. He says, where do you think a good spot in the S&P would be for a good short or a good buy long possibly for a day trade or a near-term swing trade? Okay, so if you look at the S&P futures, I'm really not that interested in buying. Again, I think that the next 8 months, 10 months, a year and a half are going to be pretty ugly. I think it's going to be recession. I think we're going to just drift lower and lower. I just think that we've been propped up way too long, and the person who's been propping up the market is now saying, we can't prop up the market anymore, and that's the Fed. So I personally will not be looking for buying opportunities, but as you look at this S&P, the question from KF is, where would be a good shorting opportunity? Well, I would say you're looking at shorting supply zones, and we actually had a great one 3 days ago, right? Right as we put this 4,300 mark on the S&P, that was one of the better ones you were going to have. Right now, I think we're in the midst of a pretty aggressive sell-off. So how do you determine, where that next level is? Well, maybe if you get a bounce back up to, if you get a bounce back up to somewhere right around 41.50, right? Maybe that would be a decent spot, but I I don't know. I don't see it getting back up to 4,300. I think there's just too much pressure of people selling in this marketplace, both institutionally and retail. And I think, as I pointed out on this show a few months back, there were 300 million Americans plus that had profits in their accounts. Everybody who's holding for the last year has profits in their accounts if you're a hodler. And those are all paper profits. Nobody made any money. So not that many puts. I think I have 15. Not much. I just closed a bunch today. I closed like 40 today, Big M. Just because I wanted to chip away at it, and I probably could have held on for much more, but this has been a pretty aggressive few days here, and I kind of think there'll be a little bit of a bounce back up, and then I'll short a bunch more. So as far as shorting opportunities, KF, I would be breaking down the smaller time frames here if you are looking to get in, and I think 4150 is probably a fairly decent spot. That's the upper end of the range on the S&P 500, but this trend is going to be going lower, in my opinion. I think it's going to go much lower. All right, let me get some of these lines off. I'm going to leave this one again. This line here measures when we hit quote-unquote inverted yield curve, and historically there's been a bullish move after we've gone inverted for a little while. Why do you use Bitcoin futures and not spot? We can use spot. It was there. So there's your Bitcoin futures. Or sorry, this is Bitcoin spot. But yeah, I do. The futures are just what's at the top of my list. All right, and again, it's the same picture. We're coming right in that area of demand, right around $30,000. After that, you're probably looking at 23.5 somewhere in there, and then even lower down here at 18,000. There was a weird after-hours ghost wick print after the market closed. Spike ES up to 41.12 for a second. It's funny because we saw that happen where we saw these weird ghost prints after market on some of your charts, and then the market like a Ouija board moved there. So you said, what, 41.12. So let me see what 41.12 looks like here. So 41.12 would be right back to... I could totally see that happening. Right, I kind of think that this has been a little bit of an overshoot, and I expect there to be a pop, which is part of the reason I bought some crypto today. I think you're going to see an equity market bounce as well as crypto, a much bigger bounce because I feel they stabilize the issue with UST, and therefore the Bitcoin selling will stop and more will get bought. So, who knows? But right now, I think that it's a little overdone for today, especially when you see such heavy losses in that crypto space. Clear your mind in Vegas. Those, I'm not worried about it, NJ. This doesn't freak me out. I mean, hell, if you saw what my portfolio has done since November, some of you guys probably would throw up on your keyboard right now. So it is what it is, right? That account is just, it's long term. I don't even think about it from a day trading perspective. Now, I do a few short term trades in that account or in other accounts with regards to crypto, and that's kind of what I'm doing today. 5,000 of that was long-term hold, but there's 10,000 I bought that I'm just playing the bounce, particularly in Luna. Is it a fair assumption that all the money exiting the markets is head to the government bonds? I don't know. I've pondered that myself, Joe. I've sat there and said, okay, if all this money comes out of equities, my mind used to think it's going somewhere else, right? Okay, it's going to go to crypto. Well, clearly that's not the case. Is it going to go to bonds? I don't know. I don't think so because... remember with bonds, if you're buying bonds, something like TLT, this is the price of those bonds. So you're losing a lot of value, but you're locking in, a rate of return. You could see that today the 10-year, where did my 10-year go? Here's my 10-year. Slightly down right now, but, it's actually an engulfing pattern. So some of you asked about an engulfing. This is actually a full engulfing because it engulfs everything from the day before. Pretty damn close. I don't know if necessarily it's going into bonds. I don't know where it's going. I think that somebody's just going into cash. To me, that's what would be happening here. It goes a little bit of cash savings and going to the sidelines. If you look also at, what else was I looking at today? The dollar index. I think that you're actually looking at people maybe going more towards that carry trade because the dollar has been so damn strong. Here's your dollar index. Yes, it's been sideways kind of spinning top patterns for the last two sessions. Still think that there's a lot more upside here for that dollar index. Pelosi getting it. Exactly, Big Ad. That's exactly right. I think going to cash. I think there's some people actually going to cash because holding dollars, you're getting that appreciation and you're sidestepping a lot of the risks. So normally they would say don't go to cash. In this case, it's kind of like cash may be a decent place to go. All right, so Mike, I think Mike is here. Let me read this question. How much time do I got? Yeah, it's going to be a long one. All right, so Mike says, just curious if you look at weekly NYSE new highs and lows. The answer, in a short, concise answer, is no, I do not. However, I think it actually has some good use. So let me read through your whole question here, and then we'll show the charts, and I'll explain why it's important. He says, unfortunately, my TradeStation only has 13 years of data, only enough for the end of last year's bear market in 2009. But I see that weekly new lows got to a level about 1,200 and other market declines, and so far just under 800 for this decline. Based on weekly new lows, significant bottoms in the market are at levels of 1,200, or right around 1,200. It might indicate that we have more downside to go. So what are your thoughts? Well, first off, let me show you the chart. And thanks for sending the chart there, Mike. This actually does help a lot because I don't have this info in TradeStation, but the top chart, what he's got is, it's the new highs and lows. So it's basically saying how many securities are making new highs and how many are making new lows. In this case, you've got new lows being made. Here's in 2000 on the bear market, right? As we went into that recession, was over 1,200. Right now, we're sitting here around 976. So I don't think that this actually indicates that the bottom is in. I think it just means that things are just starting to roll over. And in my opinion, it's that some of the major ones that were pushing price up, your Microsofts, your Apples, your Amazons, your Googles, these .com tech ones that were just so big and powerful, they're rolling over. And because they're so heavily weighted in the indexes, it's starting to bring this index down more. And ultimately what will happen if this continues, obviously this is going to do what? You're going to see more companies making new lows, and this will start to surge. So, and again, this is 52-week lows. So companies for the year making a new low. But I do agree with you. I think that I always love having something that just is like a red light bulb that goes off on your dashboard, right? Like you're driving, all of a sudden the gas thing comes on with a little red gas thing. Oh, I'm not out of gas yet, but it's a warning sign I'm about to be out of gas. And I think that this is one of those tools that say, hey, if it's over 1,200, and you've clearly demonstrated here that when it's over 1,200, that usually means that you've got a pretty sharp decline on here. And the more that you have getting new lows, it generally means it's more likely to turn. So you could flip this around and say, how many are at new highs? How many are at 52-week highs? When it seems like everything's at 52-week highs, then the probability is pretty good that it's going to start to roll over because all the money's already in, right? When you have all these companies making new lows, it means that everybody's already sold it. Then it's going to start to bounce back up. So I like to look at it as kind of an early warning sign, but I don't usually bring this one up. I'll just look at price itself. So I like to use the VIX as well, just to kind of see where those VIX levels are. VIX over 40 tells me I should start looking at the price charts and see if anything has, ripped down into a demand zone, because over 40 historically has been an oversold situation on VIX. But there's a ton of different tools like this, but I think it's whatever you can use to help yourself formulate an opinion about where the markets are going or headed or potentially going to turn. I think it's great. Just don't get married to it. It's fine to bring it up, fine to analyze it, but if it gets over 1,200, don't just automatically go, I'm buying everything. Nope. Wait and see. But the dash light came on at 1,200 and told you that a lot are oversold. So great comment. Hope I answered that one for you, Mike. So there's this comment from Randall. Said, sadly, I won't be at your Las Vegas to see your presentation in person. Will it be recorded for viewing later on YouTube? I really don't know. This is totally up to the Money Show. So the Money Show is putting this one on. Maybe they might be streaming it from their website. I don't know what the deal is with the video. I can let you know after the fact. Once I go there, I can ask and find out. But if you guys are going to be going up there, you should come to the meet and greet on Wednesday before the presentation, so we can chat and hang out. And there you go. All right, what else do I have? I'm going to go through some other markets. I had an interesting real estate question I want to get to for Frank, but I want to do, let's see what else I can get through. GD said, did you record the ghost print of the SPY 365? No, I did not. I think maybe I did, but I might have deleted it. SPY had a 365 print? Yeah, I don't think oh, there it is. Yep, there it is. So from January 24th. Good memory. Damn, that's a good one, GD. So this was a ghost print that came through on January 24th. We had this print of 365. I think this might have actually been at his 364.30 or something like that. But interesting to see that level is there, and we could get there. I mean, this year, I don't think it's. Would anybody say that's completely out of line to say we could get there by the end of the year? I don't think so. That is definitely feasible, especially with how much we've been moving, and that would be a pretty significant drop from our all-time highs. It's the tune of about 20. That's only 24%. Not only do I think we'll get there, or not only could we get there, but I'm pretty confident we will get there if the Fed keeps raising rates at the tune that they are. Let's see. Chase says, we took out a loan at 25% loan to value, and the margin call occurs at 50% loan to value. Lowe said, essentially, Bitcoin needs to be cut in half or around 21,000 before we have margin call. Cool. Well, that's good. Thank you for posting that, Chase. Got my researchers out there doing some work for me. That's great. But could it get to 21,000? Absolutely. I think I remember seeing that number too. But let's just go mark out on Bitcoin, and we'll use the spot here since you guys want me to use the futures. You look at 21,000 on this. And what'll happen as soon as it gets close, if it gets to 20, let's say 23 or 24,000, they're going to push it down below, and just anticipation. Like today, if you saw what happened on UST, the UST basically said we're going to put a floor on it. We'll make sure it doesn't go below 98. And all of a sudden, as soon as it said 98, it fell to 98, and then people just unloaded even more, and it just fell from there and fell all the way down to 93 on that UST. So here is 21,000 on Bitcoin. And again, could it get there? Absolutely. I mean, that's really not that far out of the discussion at this moment right now. I mean, it looks like that's a very real possibility. Again, that would be another 30% drop from current levels. But the way Bitcoin moves, it could absolutely hit that 21,000. And then that would be a real shit show. I mean, if that happens, I think you would see just bizarre, crazy markets. And I might have to borrow some more money. Or borrow some money. Have to sell something to clear up some capital to back up the truck on that one. I think if VIX hits 40, I would open a bear call spread at the money, probably with 60 days to squeeze more theta out of the... There you go. If you look at VIX, we've got VIX here. Right now you're at 34. But you notice I have this line at 40 and I have the line at 20. Historically, 20 is kind of the low point, right? But personally, I think you got to drop that even lower. This is just textbook stuff that you would read in technical analysis books, but I think it should be down around 15, maybe 12 would be the low for the VIX. Either way, when it's above 40, that usually means that there's some pain out there in the markets, and we're not even there. We're not even there. So, and again, I want to emphasize this. If you do see the VIX jump above 40, that doesn't mean you should just run out there and buy. We had that same situation back here in March of 2020, right? It went to 40, and then it went to 50, and 60, and 70, and 80. So it could keep on falling. And the key for me is it's your warning sign that, hey, things may be oversold. Now you're looking for strong demand zones to buy into if you get something that a VIX that's over 40. Money, yeah, they do have archives. I think that what they do, if I remember, it's been so long, but they don't record every presentation, and there's a lot of big people. I'm not a big person, so I don't think that they would record mine, but if they do, awesome. I'll let everybody know what the deal is. And if they don't do it, if they don't record it, maybe at some point I can just do that presentation for you as one of our shows. Why not? Won't be as engaging as a physical auditorium full of people, but if you guys wanted that, I'd be happy to do that for you. Okay. Any other last minute questions on this stuff? I'm going to completely shift here. This is a big about face, but I think many of you might actually have some thoughts on this one. If you look at, here's a question from Frank. Hello, Merlin. Always enjoy your show, but I'm in the market to buy a house, but wondering if I should wait until a better time since recession might be coming. Just wondering, historically, in past stock market crashes and recessions, is the fall of housing price usually followed by the crash like a precursor? So this is a great question, and I think some of you are probably thinking about buying a house. Obviously, getting some of those rates sub 3% would have been great, but now you're up over 5% on a 30-year fix, and I don't think that that's going to drop. I think you're going to see it continue slowly up 6, 7, maybe 8%, who knows, by next year. So first off, you got to look at the trends, right? We all know that in the housing market is like the equity markets. Over time, you're going to do well by holding real estate. Period. Over time. Of course, you don't want to buy a market top. Just like saying, if you bought the market top in 2007, you had to wait a long time to get back above what you paid. Hell, if you bought in 2000, you had to wait, I think, 13 years before it actually came back up to the price. So, yes, in the long haul, it'll go up. But do you want to be buying the top? So let me just real quickly show a couple of charts here, which I think are great. Here is from the Federal Reserve. This is the All Transactions Housing Price Index, so HPI. And you can see that over time, yeah, it's gone up. This is based off of 1980 as their axis is 100, and now you're at over 800 on the index. But what's noteworthy for me is the trajectory. You see what happened right before we had the big housing bubble back in 2007 and 8? It went parabolic. It went straight up, and then it crashed back down. Well, what are we looking at right now? I think you're looking at the same picture. I mean, this looks almost identical in my opinion. You've got this really aggressive move up, and all the writing on the wall is saying that this is going to pop at some point. So I thought it might be interesting because when I think of buying a house, there's two major considerations. No, it's not location. That is, I guess, one of them. But the two major considerations for me are the market timing of the price of real estate. I mean, right now, people are having bidding wars for properties. It's so insane. I'm sitting here going, I'm thinking of selling my house just because I know when this pops, I can buy this house back for 50% of the value that I paid for it. So there's the price, but then there's also the borrowing cost, right? Again, November of last year, I could have gotten a 30-year fixed rate mortgage for under 3%. Now you'd be, I don't even think it's possible to find one under 5%. Let me real quickly just bring up here and go 30-year, 30-year fixed rate mortgage rates. So here's what we've got cooking right now. And let's go to bank rate. Compare today's 30-year mortgage rates. Just out of curiosity, what are we at? The national average is 5.48. Holy cow. I mean, that's a huge jump. The bank rate average says they can get you 4.87, but I'm looking at national average is 5.48. So that has risen so significantly, I thought it might be worthy to show that on a price chart. And I'm going to overlap here. I hope this works. Okay, so I've tried to line these up the best that I could. So in blue, you have the housing price index, which is what it should do. It's slope and going up over time. That's a reflection of inflation and just costs and everything going up. But this, I don't know what color this other line is. I don't know, is this green, red? Whatever this other line is on the screen that's not blue, that is the Fed funds rate. Yes, Fed funds rate. Or sorry, this is the cost of a 30-year fixed rate mortgage. So I thought there might be much more of an inverse relationship where you'd see the mortgage rates really spike and it kills the housing market, but it really didn't. You notice back here in the 2007-8 crash, when it really started to fall, rates were continually drifting lower. And what they're trying to do is get rates as cheap as possible so that they get more investment in the housing market. But notice what's happening right now. We have not seen a move up like this. On the hard red edge of this chart, you see it's sloping aggressively. We have not seen that since 1979, 1978, 76, somewhere in the tail end of the 1970s has it had that monster hockey stick beginning. And we don't know where this is going to end. So a long-winded answer there is I don't know what's better. It's a question that we have to make, which is, am I chasing price? I mean, do I think the price is going to continue to go up much from here? If it is, then maybe 5% cost of capital is okay for that because you might get, 10, 20, 30% appreciation on your property. My gut tells me, though, it's the other way around. My gut tells me that housing prices are going to sell off going forward. Part of the reason is you have the Federal Reserve is raising rates aggressively. Very aggressively, which you can see on this chart. I think at some point it's pricing people out of the market. So people are going into bidding wars. All of a sudden, they can't qualify for loans. No pre-qualifying at 5% when you could have qualified at 3%. I think that will have an impact on demand. Now, certainly supply is an issue. If we still have very, very thin supply, okay, great. Prices may continue up. But at a certain point, you're going to get people like me who go, man, I could get 15, 20% higher than my home value because people are bidding for it. And then all of a sudden, I would go and sell my property. So supply might start to increase. I have seen a lot more for sale signs in my neighborhood over the past 6 months, which is interesting to see. They don't last very long. But I guess for Frank, if it was me and my money right now and I say, okay, I'm looking for a place to live, I would say no. I would hold off buying. I just think that you're headed towards a housing bubble. Now, is it going to be a 50% crash like we saw in 2007-8? I don't know. I don't think so. But could we see a 20, 30% decline? Yeah, absolutely. And then at what point, by the time you get everything together and buy your home, are you going to be at 5.5%, 6%? Remember, you're locking that in for 30 years. yes, we can refinance down the road, but you're putting yourself in a pretty difficult financial constraint going into a recession. And yes, I do think we're going into a recession. So, there's a lot of dark clouds on the horizon for me for the markets for the next couple of years. I don't know if I would lock myself into a financial commitment that's that extreme at a much higher rate, let's say 5.5% on my mortgage, that should something happen to my employment, that I might actually be unable to make those payments and potentially lose that property. So, kind of have to put your excitement of owning a home on the back burner for a little bit. And to me, it's really about market timing. Now, again, I'm not a financial analyst. I'm not, a financial advisor. It's just my opinions about the market. But, you look at all those factors and you need to map out what works for you. If you're in a position where you're rich in cash and you're okay with it, then go for it, But I would say don't rush into something. Sit, do the numbers, map everything out to make sure that in a worst case scenario, let's say you lose your job for a year. Will you lose your house? If that does come up, then I would say don't do it, because you never know what's going to happen out there. Big Ed says 30% decline in housing in some places only takes us back to a year. I know, right? That's pretty crazy to think that it's just 6 months ago we were... Absolutely. I'd rather wait until prices are low, pay more down, and pay off early to reduce the higher interest rates. Yeah, I agree, Dave. I'm right there with you. I think that is probably what I would be looking to do. Again, my personal gut feeling is I own real estate, and I'm thinking of selling that, renting for a year or two, and then buy back in when I think that the houses have dropped enough. The challenge I'm going to have, let's say I buy in 2 years, is I will get a house at a much lower price. So let's say I look to buy $1 million home here in Orange County, which is like an apartment building, or a 2-bedroom apartment. If I were to buy that at $1 million and it drops to 500,000, if I'm living in that for the rest of my life, fine. I don't care. It's like Bitcoin. I don't care if it falls 50% because I'm going to hold it for plenty of time. However, I have to consider that mortgage payment. And if I buy now and prices do fall 50%, I'm stuck with that mortgage payment because I don't think for the next couple of years you're going to see rates drop. Right? If we get rates down to 3%, then maybe you can refinance and ease that financial burden a little bit. But those are two very, very difficult things we have to balance out. There you go. Mortgage and cash for rainy. Yep. The mortgage is a tough one. Let's see. Joe said, I would not be shocked. I would not be shocked if the housing market doesn't do a repeat of 2008, but for a completely different set of reasons. Yeah, I mean, it could fall 50%. I just, I don't want to be that purveyor of doom and gloom and have people freaking out. It certainly could. I mean, anything is possible, especially when you look at a chart like this one here, where prices have appreciated so much. Let me take off the Fed funds rate. There you go. I mean, those are pretty significant. If you look here from 2012, and this is for California, so it's going to be different for some other regions of the country, but we were sub 400 on the index and now we're over 800. So it's 100% gain since 2012. Okay, I mean, 100% gain in a decade, that's not that crazy in my opinion, but I think that it's just gone too far, too much. If you sell your house today, you cannot buy it from yourself. True. I'm sure with some crazy derivatives or some, financial product, you could probably sell it to yourself. You could probably short it to yourself or just short it. Now, that would be interesting. Could I go short my home? I could still own it, but I'm going to do a short against my home. That would be interesting. All right. What else is sell now, rent for 2 years, then buy the same house back? Is it kind of like a short sale? Kind of. I mean, again, what am I going to... My biggest expense there is now I'm paying a bunch of fees. I got to pay when I sell the house. I got to pay when you end up buying in and all these different closing costs. So it's going to cost you a bit of money, but... I mean, those are a lot of different factors. And of course, we could spend an entire show if I get some nice real estate expert on here, which I'd love to get on, and talk about that more in detail. But personally, if I had to put my stamp on it, I'm going to say no to buying right now. I would hold off. I think the market's way too hot. I mean, it's in fuego at this moment in time, and I think rates are rising way too fast. So by the time you finally find your home, you get the one that you want, you do get yourself a loan, you're probably going to be outbid by somebody in cash anyway. So, yeah. I would say wait. Anyway, long-winded answer. Isn't shorting your house a reverse? Don't know, Dave. Don't know. I don't know. Not sure how that works. It's out of my area of expertise. I got to draw the line on my intelligence at something, and that's I actually am familiar with them, but I don't know if that's necessarily shorting your home. All right, let me run through this because I got to wrap things up here because I'm off to Vegas So here's what we have cooking for tomorrow. For those that are in the cannabis space, I know we got Michael here. He loves those cannabis stocks. Unfortunately, they have not been looking very good at all, but you're starting to see a couple of them report earnings. You've got Cronus coming out tomorrow before the market opens, and then on Wednesday, you have Aurora Cannabis reporting earnings as well. But tomorrow, what else do we have? Before market opens, you got Bausch Healthcare, and then everything's really aftermarket. You have Occidental Petroleum, Wynn Resorts, Boot Barn, Electronic Arts, Excelsis, I don't know that one, and the Trade Desk, TTD, one of Larry's favorites on his portfolio. And then for tomorrow's economic announcements, you notice a lot of FOMC people on this list. For Germany, you've got the German ZEW Economic Sentiment Report. Again, anything above 0 means good, positive economic expansion. Right now, people are feeling very bad about the European economy and the German economy. No surprise there. Tomorrow, you have FOMC members Williams, Waller, and Mester all speaking. That could create waves. Same thing with the German Bubba President Nagel will be speaking. And then for the U.S., you really just have one economic announcement, which is actually two, NFIB Small Business Index, which has been dropping consistently, as well as the TIPS IBD Economic Optimism numbers. That is it for tomorrow. All right. Man, I even got out of here in under an hour. I love it. So that will do it for today's show, everybody. Again, if you have comments, questions, feedback, feel free to send those on in TraderMerlin@gmail.com or put them down below the YouTube video, as many of you have been doing. That has actually been helping. I think it's been helping out a lot. But if you put your comments down below the YouTube video, I answer those ones first on the show. I try to get to as many as I can. Sometimes I run out, but and I remove all the X-rated ads that people try to spam me with, and crypto scams as well. So hopefully none of that will come into your inbox. So if you have anything else, email me at TraderMerlin@gmail.com. As you guys know, I will be in Las Vegas tomorrow and on Wednesday. Presentation on Wednesday is going to be, I believe, at 1:30. At the Paris Bally's Resorts. You can attend that one, and maybe if I can find a link to the live broadcast, if there is one, I will post it on my Twitter feed, which is at TraderMerlin. You guys can check that one out. Until then, happy trading, everybody. I will see you all on our Thursday show. A couple days off for me. Happy trading. Be careful out there, and I'll see you guys on Thursday. Take care.